What's up, YouTube? Welcome to more trades. In my previous video that I posted, I told you if we could get a pump today, I expect a rejection at this blue line over here. It's a Fibonacci channel at this blue line descending, and we did get a rejection over there. And you could have taken a short over there. Not financial advice, but if we pump again, I would expect a rejection. I even gave you the price target at the moment. If we pump again, which is a bit difficult because we're under previous support, we've lost our previous support, which was the green trend line that we had on another chart. Let me see if I can pull it up over here. We had a green trend line. We fell right through it. You see this green trend line? This was representing the trend line from the peak that we made when we came down here on the 4-hourly. You can see the peak we had, this trend line, and we were holding it as support. At the moment we're under it, and 20,070 or 20,000 is a very critical level. As I mentioned before, we're getting a small bounce at the moment. This is happening because the DXY was pumping today. If we go down, 19.5 would be the next level. Why I'm showing you this is I wanted to explain how was I able to take the trades and get profits. As you see on my thumbnail, there are two trades which are in the hundreds of percent, probably 180, 200. Those two trades were taken about 24 hours ago, and you can make that much of profit within a short period of time trading. If you trade, you enter at the proper time, at proper position size with a stop loss, you could make that money. Important thing is you don't FOMO. Don't just over trade, revenge trade. Stay away from that. Wait for the trade to come to you. What I mean is look for a higher probability trade. So I have this Fibonacci channel that I have here. I have a target. If I get to it, I look at the price reacting into it. If I'm looking at the 1-hourly chart, you could see we had a long wick. We had a wick over here. This was earlier today. We had a second chance to enter over here. If you entered over here and you had a stop loss a bit over here, probably you would get stopped out. You put it a bit higher than this wick over here, and if you had your stop loss here, you'd be fine. Then if it hits it, then that means you get stopped out. If it doesn't, then you have a higher probability to roll over and start going, the trade going in your direction. And then you look for support. If it goes to support and we lose support, there's no reason to close your trade. You could take profit. You could move your stops into break even or into profits even, and stay in your trades. But taking profit is a good idea. You take some money off the table and you move your stops into break even if you want, as in no profit, no loss, or even into profit, that if you get stopped out, you get stopped into profit. That's one thing I wanted to tell you. If you use these strategies, you will increase your profits and reduce your losses. You're not going to win every trade, but the idea here is to win more than you lose. This Fibonacci channel gave us several trades. I gave you targets so many times, and I have a different Fibonacci channel on a different chart, charted differently. I think we also got a rejection there. Here you go. This pink line was another, on another chart, was another chance to enter. So we had one chance over here at around this point. Then we had another chance to enter at this other rejection. So you could have entered here, and once you got to the green trend line, that is, I showed you, it comes from the peak that we did as support, and you see a reaction on smaller time frames that are showing, for instance, a stopping volume candle, and you see that we might be moving up, then you could close out your trade maybe and start off going in a long and wait to anticipate the highs again. And once you get here, you come out of it. It's ideal when you're in a ranging market. This isn't a proper range. It's sort of like a descending wedge. So that's one thing. Another way I took trades, you would notice in my thumbnail, there are some trades that are in the thousands of percents of profit. How did I get to take those trades? What was the idea that I took those trades? The idea of those trades was also due, as now the trade that I took, on a rejection. I saw a rejection of a level of an EMA at that point where we were rejecting, I believe, the 200 EMA. It was somewhere around here that I got in my trade. It's around 40,000. That trade is still open. My stop sign profit, there's no way I'll lose. The more it goes down, the more money I make. Now let's try and see if I can get those EMAs over here. You see the white EMA over here? That's the 200. Bitcoin has been having a problem with the 200 EMA. Put it on your chart and go back. The 200 EMA on the hourly, I mean the 200 EMA on the hourly, yes. This 200 EMA on the 4 hourly is the 800 on the hourly. So if you go on the hourly chart, you'll see that it was the 800 EMA. So this 200 EMA, you see how it caused a rejection over here? Okay, we pumped above it and then we came back down. Let me go on the hourly and try to pull that up so we could see what I was looking at that time. And my entries are usually on the 15-minute chart. I don't just go on the hourly, I even go on the 1 minute to see each candle, how is it reacting. Once I see a reaction, if I see the reaction on the one candle going in my favor, on the 1 minute, I check the 3, the 5, the 15. It moves from time frame to time frame. If I see a crossover of EMAs, I look in higher time frames. If I see it on a lower time frame. So you see over here, the white line is the 200 over here. We were having a problem. Bitcoin has a habit of rejecting at the 200. Sometimes we pump above it and we go back down. So say I saw this, and from previous experience from the 69K, I saw that Bitcoin had a problem, and every time we drop, we have a good drop after that. So that's how I entered, and I'm still in profit over 3,000%. So look at this. We came down again. We bumped our heads over here on the 200. You can back test it and check. Sometimes we pump above it and we come below it, especially during this time when Bitcoin is on a downtrend. And we went down, and now we're doing almost the same thing. And at the moment we broke above it. Not at the moment, a few days ago we broke above it, and now we're again under it. So this is an important EMA. The blue one is the 50, the white one is the 200. When the 50 crosses the 200, that's a bearish cross or a death cross, and that's even worse for Bitcoin. So you see they're approaching each other. Within the next few hours they may cross. I anticipate within 1 hour, 2 hours, if we continue this move down, we would have a bearish cross. Another indicator I like to use when I'm looking at crosses of EMAs is when I get the 5 and 13. On this indicator you can see the 5 and 13 EMAs. They're not visible now, but if the 5 and 13 have a bearish cross, the 5 crosses down on the 13, and even if it goes down to the 50, that's even more confluence that we're going down. At the moment 5 and 13 cross down. That was on I look at it in the 15-minute. I take my trade from the 15-minute, and then I also look at the MACD, and you'd see that the blue line crosses under the orange line. Then that's further confluence. That means momentum is going, Bitcoin is losing momentum, and now we're under, and we're getting another cross of the MACD on the 1 hourly. So that's even more significant. 19.5, if we lose the 20,070, which we're just bouncing off it now, that's significant support. The 20,070, if it's lost, it erases the bullish case of a lot of people that were counting this pump up that we had as a beginning of a 1, 2, 3, 4, 5 to the upside. If we lose 20,070, then that erases that. That means this count is not accurate, and we are still going for another wave down, and my Elliott wave count that I've shown before would be more probable. The DXY is still ripping upwards. So if you follow these strategies, there's a good chance you'll be able to make more profits, less losses. Trade light, as in use small positions, position size, so you can withstand higher price movement. So if price is not moving in your favor and you're in the negative, if you're using a light position, you have higher chances of withstanding it. You won't be losing much money. You'll see that I'm using a bit of high leverage, but because I've been trading for a while, and I can control it. I know how to put my stops and all that. I hope all of you have taken those trades that I posted earlier. Whoever watched it and took them, well done. And another thing we could be looking at, if say now on the 15-minute time frame, we end up pumping up, I would expect this previous support turn into resistance at 20,300, but I wouldn't take it blindly. I would look at the MACD, momentum lost. I would look for a rejection candle. That means a candle probably that has a long wick to the upside and it's going down. Then that will tell me that, yeah, we're continuing down. Thanks for watching. Please like and subscribe, put comments, and share the videos.